The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on up here? Well, we're at 2802 on the S&P cash. I've told a couple people in the den earlier. I think I said it yesterday, but it's hard to remember when you talk for an hour what you said. It's hard for me to remember you this morning, much less what I said yesterday on the show. But I think, I'm pretty sure what I put in the newsletter, I can always read that, that there was kind of a wall right here at 2,800. And the option market makers, more than anything, are going to make an absolute Godsmack amount of money if they can get this thing to expire right around 2,800 on the S&P cash. In fact, this was one of the biggest troughs, i.e., they want this thing to close at 2,800. They need this market to close at 2,800 at the end of the day. And, you know, will they lose a little money if it goes up to 2,810? Or down to 27.90 for their options? It will. It's just that there's so many of these options that'll go unexpired around this area that it makes up for a lot. They also were selling huge amounts of puts earlier in the week for today's expiration. Everybody was planning for the end of the world. I didn't like it. I said it so on Tuesday. I would have much more thought that if we were going to go down, this would have started last week. And wouldn't it happen during expiry, the monthly expiration month? But there are billions and billions, I feel like Carl Sagan, billions and billions of, that's coming back in 2019, by the way, another series of Cosmos. But anyway, billions and billions of dollars to have if they can park this thing at 2,800. And there's probably some other reasons. A lot of people scratching their heads. Well, with all this kabuki theater going on in Washington, why aren't these things moving a great deal more? Well, I'm going to tell you today. We'll get into it. That is, this government shutdown is not your grandpa's government shutdown. Oh, I love that guy that worked for Oldsmobile that came up with that advertising campaign, only to crush an entire ad campaign, or I mean an entire division of General Motors with that, didn't he? And, of course, you can't buy a Pontiac anymore. I had a couple of Firebirds. I like them. Couldn't keep paint on the thing. Not exactly sure why. The rest of the car was fine. And what else do we have? That's it. I mean, we're up 5 points. I'm expecting, like I said, the last 2 days, that if any deal comes, it will be after the close of business today for the market. And, you know, is it these guys on Wall Street call up their senators and go, hey, you know what we need? If you're going to do anything, just do it after the market closes. If you're going to make a deal, you're not going to make a deal. I just want you to do nothing. And, of course, since these guys can't be sued for insider trading, do you think there's ever collusion between senators and congressmen and Wall Street? Just a thought. I have no proof. I do have a lot of aluminum foil, though, and it makes a comfortable helmet. So we'll think about that. I do know some real reasons going on out here that the market is not reacting to this government shutdown as others. We'll talk about it also in the day. But again, there's just not a lot to talk about. It's expiration day. We're not seeing a lot of movement. I don't suspect we're going to see a lot of movement before the end of the day. We're kind of just going to be here. And as I said yesterday to a couple of people. I thought it was going to be kind of a boring 2 days into Friday's close. At least that's what the options told me. I didn't have to look at the news. All I had to do is look at the options and see how many billions of dollars option market makers who know the market much better than us. They see the man behind the curtain. They know what's going on, what's real and unreal. And maybe they do get a few phone calls from that, was it 212 area code? I think that's what it is, or is it 202? Been a while since I've been up there. I did say it. Okay, thank you. I'm not, I don't have the option chart up on this machine. Unfortunately, the data company that I was getting my data from changed, and I haven't glued my charting software onto it. I'm just looking at the raw data, and hopefully I'll get that fixed. I had a lot of other things going on, and that was a lower priority. I probably would have fixed it this week, but I had a big webinar on Wednesday. A few people may have listened to that or heard of it. Also was working on a lot of other stuff, improving some of my other tools, but maybe I'll get to that this weekend. But yeah, it's you can just look at I've been doing this since 2004. So I've had a little experience at options expiration, and man, if it was anything like around 2003 and 4 with OEX, I would have been retired in 2010, but that changed fairly quickly. Markets adapt pretty good to people like So's Bandits and people like me that were rating options expiration days, and it is tougher. I get about 4 months a year now where you can make fairly large money on options expiration. But you've got to have a market that's ready for it. And you know what? It's got to be kind of unstable. A flat market isn't good for anybody trying to make any cash. In fact, we'll talk about IBM today, too. In the meantime, let's get this party started with a little bit of history.
Then it's all just a little bit of history repeating.
On this day in 1999, RIM introduces the BlackBerry. The original BlackBerry devices were not phones, but instead the first mobile devices that could do real-time email. They look like big pagers. I should know. I had one on my hip for 2 years. This is somebody else writing this. While working at Anheuser-Busch in the early 2000s. In 2001, I visited the BlackBerry production facility in Waterloo, Ontario, Canada. It was surprisingly small at the time. The way I heard it, the name BlackBerry came from the similarity of the buttons to the original device had to the surface of the BlackBerry fruit. Although I have been to Waterloo, Ontario, Canada, many times. Used to do recruiting from there. Got a great engineering facility. But you know, one of the big problems with Canada, that is that the startups there sell and are priced about 25% of the price that its counterpart in Silicon Valley is priced at. It's called the Canuck discount, because once you get successful like BlackBerry, everybody steals your engineers. That's kind of what happened to the brain drain that hurt BlackBerry. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we are back, a couple of questions. A couple of them from the email about BlackBerry. One from the Den. The first one from the Den is they have encryption that USA didn't have, and the answer is yes. They were and marketed this to businesses. They didn't think individuals would want to be able to text back and forth to each other. So they basically built a system that had encryption built in. It wasn't great. Anybody, any nation state with a few bucks could have broken it. But for what they were looking for, I think it was AES 64-bit encryption. So you could bust it fairly easily, even if you just had a fairly decent workstation, I think. But it was encrypted. Later on, I think they went to AES 128. But bigger than that was the device used, the first devices used satellite transmissions. BlackBerries worked everywhere, which was interesting, as long as you could see the sky. And that was kind of neat. Now, of course, they eventually migrated over to cell phone networks, but and could use cell phone networks too. But one of the best things, if you remember 2000, if you drove a little ways out of town, that was it. You had no cell coverage. It's not like today. And people liked it, especially traveling salespeople, because they could get messages and stop at the next truck stop and pick up a payphone. You remember what those are? Bueller payphone. Anyway, that is it. But of course, it didn't take very long for people to look at kind of the clunky design of this, especially Steve Jobs, and figure out that he could make something like this work probably a lot better, and came up with some ideas, started looting some of the BlackBerry employees that knew what was going on. And that's why it's always a problem in Canada holding a technological company together, and that is because you're constantly getting looted of your best and your brightest, and they're paid 4 times more in California. That may change with tighter restrictions on immigration, but kind of still the same thing today. You know, that's probably what killed it and let Apple really in the door. They didn't spend a lot more after the initial device, as much as they should. And you know, when you get an advantage in technology, you really got to push it. And in my opinion, they kind of rested on their laurels. And as they say, if you leave the door open, the wrong dog may come home. And it was Apple that cleaned their clock. Of course, the government shut down. We got a 5 minutes going on out here. You're going to hear everything up and down. I don't expect any kind of news, substantive news, before the end of the day. And like I said, I think that a lot of people are clued in Washington, D.C., probably saying, you know, if you're going to do something, do it after 4:15 till all the options expire, and then you can cause your mayhem. But one of the things that is different, if we were to shut down, I'm still thinking that's a low probability. The director of OMB has been talking about it several days, actually went on TV today. I wanted to throw something because I normally don't watch news, but I wanted to hear what he said. And, of course, what I wanted to do was shoot the TV kind of Elvis style, because that moron Jim Acosta was on there asking a question that made me think that he probably shouldn't be covering the White House if he didn't know the answer to that question. He was saying, why can't you just pass this bill? And the guy said, well, because for spending bills, you need 60 votes. We've got 52. And Acosta kind of looked at him. You know, it just, maybe it's just I've grown weary of this. But I don't know. I really like the guy that was from Louisiana, the general down there, that kept on telling the reporters to quit getting stuck on stupid. And I saw a lot of that in the meeting today. Anyway, back to the director of OMB. He basically went through all the cash that's available that they could spend. And it looks like they could shut down the government and everything could run as is for 2 weeks. What is different between this and your grandfather's shutdown? Well, the other shutdowns were designed for maximum pain and shock and awe. They may be able to run this thing for 2 weeks without a budget and still not get rid of a whole lot of folks. My guess is that they'll get rid of the folks that they don't like, probably government employees and other folk that probably wouldn't vote their way anyway, and probably fund the military and everybody in it. But that's it. If things did go that way, probably the biggest reaction I think we're going to see immediately are things like AEI and API, EIA, EIO. All the reports from next week will probably be delayed. And that means that you're not going to see a lot of interday stuff. No, don't look for FOMC announcements and messages, that kind of stuff. But again, I'm figuring maybe 10 or 15% chance that they don't make a deal. This may just be a lot of kabuki theater to make up for what has been rather good news. And as the Batman's manservant once said, some people just want to see the world burn. I think that there's a handful of them right now. Yeah, Mulvaney, pretty sharp guy. Anyway, I love the way he put down these stupid reporters asking stupid questions, and I just wish and pray that they'll once again say something like, General, what's the guy's name? General whatever. Anyway, the reporters were asking a bunch of stupid questions after the 2006 hurricane in Louisiana, and he just kept on telling them not get stuck on stupid. I love that. We need more of that. Yeah, don't get stuck on stupid. Well, Jim Acosta looks like a dummy. Okay, so what else do we have going on out here? Whenever you're on the side of the majority, it's time to pause and reflect. We'll be with Tom O'Brien at 3:30, and we'll be talking all technology. Hopefully, we'll have some other stuff going on, but there's some really good news out there. And if you're worried and thinking of all the negative vibes out there, Mr. Moriarty, okay, that's a reference to the, was it 1967 or 1968 movie? Does anybody know which one it is? I don't think they do. Anyway, we come back. We're just going to go to charts and look at them. Not a lot of movement. Don't expect a lot of movement. We're at 28.05, which is kind of the high end of the range here. But as long as it stays pretty close, I think the market makers are going to be happy on that. Trying to think anything else. We got some other stuff. We'll go through some earnings. We'll talk about why IBM is down today, even though the revenues were up. How can that be? Enough of your negative ways, Moriarty. Does anybody know what movie that is from? No, not Sherlock. Not Sherlock. 1967. 1968. I'll tell you that Clint Eastwood starred in the movie. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And of course, we were talking about Kelly's Heroes, one of my favorite movies. I do have one of the clips from that.
To make a deal.
What kind of a deal?
A deal. Maybe the guy's a Republican.
I always love that. And of course, maybe someone even knows who actually said that. He passed away last year. Anyway, we've had enough fun here, or at least I have. It's time to move on to the stock market and get back down to business, even though there's not a whole lot going on right now. IBM, we're starting to see a theme on the stocks that disappoint. And again, most of these things from Goldman Sachs and IBM, the numbers weren't that bad. They just chose unwisely. And what am I saying about that? A lot of these folks bet that the tax deal would not come to fruition. They took another path. And that's really what's hurt Goldman Sachs in their trading and IBM in their tax planning. A lot of these companies are taking their lumps this quarter. And even though revenue actually increased in IBM, they had said that it's going to take a couple of quarters for them to get back on track with the way that they scheduled taxes. And that's kind of what's doing out here. 161.30 was the low today. You needed about $8 to make money on this thing. It's down $7 now. So you basically got to the point where you would have started making money if you were short this thing and buying puts on it. So you really didn't do anything. And that's kind of like Goldman Sachs and the rest. You wouldn't have made any money going long. You wouldn't have made any money going short unless you shorted the equity. But I'm not a big fan of shorting the equity, especially into earnings. You never know what someone's going to say, especially today. But that's kind of it. Rest of earnings are not all that exciting. We do have some news out on Nike, and it's moving higher. Yes, we got another person that gets a gold star in the den today. It is Don Rickles. I love that part, though. Make a deal. Nice pop higher, but not the volume. Looking for 16 million shares in Nike. It's popped up with 8 million shares so far. Still got the end of the day out here. Certainly looks like it's going to hold that previous high. And maybe retail is starting to get its mojo back a little bit. Maybe we had the death of the malls too soon. I don't know. I still don't see anybody going to the malls. That's problematic. Same thing when we talk about AXP. They had a big write-off. And again, a lot of these folks got the tax deal wrong, and they're kind of paying for it now. It was a fairly confusing earnings statement when this thing came through. I looked through it, read it through it this morning, and a lot of these guys just planned poorly. Had some other issues, and these things are down. But my guess is that unless something fundamentally has changed, which I couldn't get from reading the earnings statement and the press thing, it's just that these things were kind of high levels. They didn't like the fact that especially Goldman Sachs got the trading wrong, didn't like IBM basically getting a lot of their expenses wrong. When you're going to be able to expense, at least on the smaller companies, 100% of his stuff off in the first year, there's going to be a lot of displacement, or as they call it in the tech circles, of course. You want to look at it, but down on huge volume, back into the trading range. But, I mean, were these things kind of up on vapor to begin with? There's certainly not a whole lot of volume. But is anybody getting rich going short XP or IBM today? Man, they may have made a little money, but I don't see any kind of permanent damage to these anymore. Just everything's been a little soft, so we may be a little bit over the tips of our skis. When we look at Kansas City Southern, it's off $1.60 today. But as far as we can tell for earnings, this thing hasn't broken any highs or lows out here, actually making kind of higher lows and lower highs. So we may be just consolidating for a while. Just because markets can't go any higher doesn't mean they go lower significantly. We could have a week or two of just consolidation. And, of course, this is the 19th. So when you want to handicap this thing, we've got all of next week where we could have some action. My guess is it might be a little higher. We get to the 29th, we're right back into fund buying. And of course, we're a week or 10 days away from people getting $100 more a month in their check. I don't hear a lot of people talking about that. That may be built into the market somewhat, but it's certainly not going to be a negative tone to February, in my opinion. You've got fairly low unemployment rates. The question is, what's going to be a catalyst to get everybody feeling bad, other than the fact that maybe that a top, or at least a short-term top, is in? I could grant you that. I just don't see anything. I still don't see anything in the 52-week highs that looks like a lot of these companies rolled over. The only thing is what we talked about last Thursday, which is VNQ, which continues to show that these REITs are sick. They busted out the low. They did it with volume, and we're now back into kind of this lower part. But as sectors go, there isn't that much out here that really looks that horrible. Even had a higher high or a higher high with volume on December 18th in the VNQ. So this one isn't as horrible as you would think. Energy down and volume has been pretty good. But when we look at the rest of them, like all the other, well, maybe we'll just look through some of these EFTs. You got highs out here. Energy wasn't all that exciting in the SMHs, but they're kind of still up here at highs. You're making a little higher high on SMHs. I continue to think maybe why we've seen the highs for a little while in the SMHs, what we're probably going to see is sector rotation. And maybe that goes into the story of fund buying starting the 29th of this month. These things do look kind of lofty, but that does not mean these things have to retrace. All it means is maybe they go sideways for 3 months until they get their mojo back. Probably going to get some pullback, but are these things looking that horrible? And I mean, we got 6.1 million shares into 7.7 million shares. So you were a little light on the 17th, but not the kind of thing that makes the market turn around on a dime. So that's it. Even some of the energy companies where we see a lot of significant highs that look like these things are topping out in the energy sector, even Schlumberger today is basically trading sideways. It's off 10 cents today. So not much going on in that. I've got my long positions in metals and more than willing to just sit on them for a little while. So the question in the den is what I'm going for. And I like where I'm at. I like the positions I've got. I don't want to give them up. It'll be hard to get back. We'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And for extra credit, who was the actor that actually talked about, was given all those negative ways to Donald Sutherland? I'll give you a clue. He was an actor that became the captain of a big ship. You might remember him. A lot of good people in that movie. We're going to go to Robert in Chicago. How you doing, Robert?
Hey, David. How you doing?
I'm having a good day.
So I'm going back to some comments you made about stocks that get to 90. I think you're talking specifically about Microsoft. But
Yep.
I have another stock. It's been hanging around 90 here for a while.
Yeah.
And was wondering if this stock will go to 100.
80% chance.
Wow.
I mean, I've gone back and looked at this forever. And once you take 90, it seems like these things always go to 100. And I mean, always 80% of the time. But that's good enough for me. I mean, I think you here what you wanted to do was buy this thing on the last time it was back down around 85. So would I buy it now? Probably not. Microsoft seems like the better setup. I haven't looked at it today. Let's take a look at that. Okay, so it's at $90, right?
Right.
If you get any kind of pullback out here, a light volume pullback, but the question is just what you want to do for what you want to do. But it's a 10% trade. I normally look for 20 or 30% in equities. I don't like to go for the short money. But my guess is that if there's one stock going from 90 to 100 in the next 2 weeks, it's Microsoft. So,
And can you, once it gets to 100, do you see it going more than that?
101. That's normally when I played these before.
Yeah.
If I had like a stock at 80 and it got to 90, I just put a stop back at 80 and walked away, put a sale order in at 101. And every single time they've hit 100, they've hit 101. Now, some of them I've let run even farther than that, but it seems like they hit 100, they hit 101. And I don't know if that's just running the stops at 100, but, I get an extra buck out of the trade, so it was okay. But if you go back and look at the charts, just how many of these things hit 100, and it seems like if you just get a split in the stock, and then it goes to 90, it doesn't work quite as well. But if the stock's been around at the same price for a couple of years, everybody's gotten used to it, and they see 90, you just go to 100. And The only thing I can think of it is behavioral economics, why everything ends in 99 cents and gas ends in 99.9 cents, right?
Right.
And yes, we've got Hector that comes up with Gavin Newsom. That's not Gavin. Gavin something else was the guy's name who was the head of the or was the Love Boat captain, right? Gavin Newsom is the governor or wannabe governor of California. But I'm figuring, yeah, Gavin McLeod, thanks. Anyway, we're back to you. I got to get that out.
Matt, where would you be wrong if Microsoft went under a certain point?
That's what I'm saying. You kind of want to buy this thing at if you could, if you got a gap down there about 77.
On Microsoft?
Excuse me, not 77, 87.
Okay.
You see where that little gap up is on the 12th? Yeah. That's where sport's going to be. And, you know, if that thing breaks, it goes back down to 83, in which case that's where I would be a buyer of this thing if it came back down there in light volume. Once it's hit 90, it may come back, but it's going to 100. So to me, I would love that, but I don't do 10% trades. So here you've got the trade with a possibility of 10% up. 13% makes it a little nicer to me at 87. But
sure.
yeah, if you got back in there, you know, once these things go, I just like that the semis seem to have kind of hit highs. But let me do this. Let's go ahead and take a look at the internet stocks, because I may have. Where's it at? We'll find it here. I want to look at my sector charts because I do one just on the internet style stocks, and Microsoft is kind of a lot more in the internet sector, trades with them more than it does the semis. That's the EFT, retail, healthcare, biotech, internet index. There it is. So let's take a look at this one real quick. Well, this is where I'm saying that 87 probably looks good. What you would like to see is a little bit of pullback. A lot of these companies in the internet sector and other, let me zoom in here, or zoom out a little bit so you can see. Are you watching on Tiger TV or in the den? For my sector index, this thing's kind of topped out and it's coming back, but you've gotten no real destruction in the price of these internet stocks, even though a lot of these things are starting to close back under their 9-day moving average. So for me, if this thing could get down to like 40 and you really don't have any more destruction on it, that might be good. And my guess is that the run for this thing from 90 to 100 would probably start maybe just a couple of days before fund buying. So would I buy it today? Probably not. I'd watch it if both the internet index, which is PNQI, if you're looking at the ETF. Right. Microsoft really has been trading with this one a lot more than any other ETFs. I'm going to use this one as the benchmark. But, you know, Facebook, Netflix, you got Netflix earnings on Monday night. That may put a little bit more into the FANG stocks. Apple kind of getting beat up a little bit. That would be nice. That thing goes to purgatory for another handful of days next week. I kind of see that right now, the way I'm looking at it, the next big run could start around that fund buying term and run up maybe into the news where everybody starts getting more money in their checks. Maybe that's the high in euphoria around the 10th or so of February. But I'm that's my speculation now. I'm looking at putting plays together and more positions to probably front run fund buying and probably go through the 10th or so of February, because everything else looks like it's kind of pulling back here, but there's not much price destruction. So it looks pretty good to me, but I think maybe just a handful of days early. Does that make sense?
It does. And you're looking at maybe January 28th, 29th, 30th?
Yeah, fund buying starts the 29th. Okay. So, you know, you're probably a lot of these stocks, especially if they're going to run them, you can sit there and watch the 27th to 28th. You can watch people get in them because they already know the other side of their business at Goldman Sachs or Morgan Stanley or any of these other companies know what people are going to probably be buying. They buy in front of it. And you start seeing the movement there. And, the people in the ETFs, they kind of get the highest prices when that money comes in on the 401ks. So,
Thanks, David.
You bet. That's what I'm thinking right now, short of any other new news. Anyway, we'll be back for the closing segment, and we'll be with Tom O'Brien at 3:30.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Hector emails me about Square, and, you got very good juice off this December 22nd low. It's kind of going sideways here. I suspect that this is set up when I looked at the financials. Same thing. This thing looks like maybe you want to be looking at this Thursday or Friday of next week going into fund buying. So far, it looks pretty good. Maybe just a little consolidation, maybe a more complex wave up to test 49.56. But I think, we're probably thinking that we've got a lot of consolidation to do in a lot of these different sectors. This one would probably be one of them, and it may only be, a handful of days. It's up on okay volume today. It's looking good. if I was buying it now, I'd still want to buy it at 40 or around as close to 40 as I can. This is probably a little rich for me for risk reward. Maybe you get a down day or two next week and you get the opportunity. And if everything looks good, the market keeps coming back on light energy, doesn't have much price destruction, then you'd want to look at it for 49.56 for there. Phil writes in, and I'd forgotten about this. I'd actually heard about this thing from somebody else and tested it maybe 15 years ago. But maybe it actually started off, the first thing I heard about this was back in the 1920s. But Phil writes in and says, Dorsey Wright has a list of the stocks going from 90 to 100. So if you Google that, you probably could find them. But a handful of stocks set up to do that. If you want, I'll try to find the link to it. You can always email me at path@tfnn.com. And what do we got here as we close out this show? 2806. So we're kind of in that range. Nothing much happening. We'll see you at the bottom of next hour with Tom O'Brien. We'll be talking technology to exit out the last 30 minutes of the broadcasting week here at TFNN. For you then. In the meantime, so when you can, not like GE. We'll see you here Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you are, 2018 is a great